Hey folks, good evening. RB here. I just tweeted by couple of options that I'm looking at for SPX on how things can unfold in the coming time, in the coming weeks and a few months. Right, and I'm just recording this video to kind of elaborate where my mind is in those two particular ways or two or three particular ways which it can unfold. One is like we have two options on the bearish side, and then we have one bullish path, right? So just wanted to kind of share further update and maybe more detailed explanation in a video if tweet does not really kind of clearly explains what I'm looking at. So we wanted this new high, right? That's what I've been saying on my tweets, on my posts, and my videos before. I was looking at this to be some sort of a diagonal formation here, right? A 1, 2, 3, 4, 5, and that's where I wanted 5670 and 5700 to hold precisely here, right? And bounce from there. We got close and we got a bounce, and the bounce is pretty sharp with the election, of course, and we almost got into 59.36 as the high today. Maybe we have fuel for a little bit more high, but I think this particular leg up from the lows of the 5700 is almost done. Now, looking forward, right? I kind of shared, like I said, a couple of bearish paths and a bullish path. So since the bullish path is already drawn in here, let's just focus on this. So what I have said in my tweet and what I'm looking at is that this was my last drop here, right? It's called the breaker here. A bullish breaker, this particular candle through from which we had this liquidity sweep and then we bounced, right? So that's the area that I'm looking at. Or if you're looking at the order blocks, then you're looking at particularly this candle to be protected. So it comes down to this area of looking at both ways as 5770, and on the lower side 5720, 5710, right? I'm gonna look at this particular area, because if the price is gonna move down below in this area, this is very deep for it to be a sub 1 2 and a continuation, right? So even a breach of 5770 into this is kind of really bearish. I mean, it's too deep to be a nested wave count. And if bulls are gonna really rip it from here as a melt up, they will not close this gap fully, maybe even, right, and keep it open. So this is where I'm keeping things into check, that okay, I cannot be bearish if the price does not even close this gap. It stays above 5770 and above this breaker, uh, and kind of continues to either chop slowly into 5850, or maybe a little bit lower to catch up with the EMAs or something like that, right? And then I don't think there is a point to think bearish, and we should be looking at further upside and a breakout from these highs again. Once it dips and start coming up, will be very, very sharp towards the end of the year, and it will continue to rally up somewhere 300, 400 points, probably into 64, 6500, right? And after that, we may get a Q1 chop for a bit, and then a rally somewhere again up, right? So while you're looking at this as ending into March, somewhere around 6700, do consider that this can extend as these lines can be a little slower as it's drawn here, right? But again, I mean, in the next 5 6 months, looking at somewhere about 6700 or so, sort of a target in the bullish case. Now, coming back to our bearish cases, let's say and this is what I have recorded before. Let's say this is not a nested 1 2 1 2, but instead it was my 1 2 3 4 5 wave, which is what I have discussed in my primary uh, case, right? And which I've kept as my primary case, and I've kept talking about this for a while. In this case, I'm looking the reversal whenever it happens. It happens this week after FOMC or probably early next week, right? But it needs to happen soon. It cannot get delayed more than 3-4 sessions from here, 4 sessions probably, right? And we start diving deep into this 5770 back again, and and probably break the support, joining these two lows that we have right now, right? If this starts to happen, then of course certainly we are looking at this as a diagonal ending, right? So 1, 2, 3, 4, 5. Now I talked about a leading diagonal and an ending diagonal, and I'll zoom out and explain why I'm saying leading diagonal, ending diagonal. A leading diagonal would mean that this is just a wave one formation, and all what I'm gonna get is a partial retracement for this. Could be 5,500, could be 5,600, somewhere in this range, and we can see where the 50% or 60% really lies. And then this rally will again get into a melt up after some time after the probably after Thanksgiving, or maybe somewhere into the probably into the inauguration. You never know how much time this whole correction can take. And if you just look into where the golden zone is, it's somewhere around 5,400. So let's say it goes and dip into 5,400 by December, and then the rally starts once President Trump takes over, right? So that's one way of it when we are calling it as a leading diagonal, right? Now, what if this is an ending diagonal? Ending diagonal is generally used when in the wave fives, right? So which means that we are in the last wave here. And when we say in the last wave, I'm precisely looking at this internal structure here, which is this 1, 2, 3, 4, and probably completing a fifth wave here, right? So if we are completing this fifth wave here, for this wave three, and marking this as 1, 2, 3, 4, 5, and this was the 1, 2, 3, 4, 5 ending diagonal for this, then my correction will not be just a partial retracement of this. It'll be a full retracement of this leg, right? So when it comes to that, we are looking at a major dip coming here directly into 54.15, bounce back, and then do it. And now it can be a flat. I just use a zigzag here, but it could be a flat. It could be something else, but eventually this will retrace the whole ending diagonal leg coming to the last four dip point, and that's where 5,100 will become the target. All of these bearish cases, if you see, even if it's a partial dip or a further dip, they're all still very bullish, because we are completing by this wave 4 here, and then there is a big wave 5 at the later stage. So in the end, we will get to 6,700 either way, whether it just keeps ripping from here or it dips and then we have a rally later on next year, right? We are gonna go there, but now the question is that are we heading straight up, and or are we just gonna make a dip and then keep continuing moving up, right? So that's where it's a little complicated, but as long as we keep our levels in mind, that index should not trade below 5770 and the 5720 range, right? We are all good. I mean, there is a minor dip, no need to get worried, unless if you go long somewhere into 58 40, or maybe 5,800. Let's say a dip comes 58.20 or something like that. You go long, where your stop losses are gonna be, right? And below this is only where we will start looking into that. Okay, our bearish cases are coming into life. For now, it's much of wait and see what this pullback really looks like. Is it gonna be a pullback just for the small leg, or the big pullback is starting up, right? So hope this small video helps. I just wanted to clarify what I'm thinking of, and hope this helps you all. Thank you very much. Have a very good day. Bye bye.